Good evening and welcome to a quick analysis video here for JP Morgan. On the weekly time frame, we did put in another one of these bullish engulfing bars. It's happening on a lot of lower time frames right now. It tells me they're still buying, and strength is pushing up through the bears that are trying to sell. Now, as I zoom out here real quick on a higher time frame, JP Morgan is still at highs. It looks like it's ugly. Could potentially roll all the way back down. Um, at the end of the year, until this boost came in the end of December, it looked like this was going to be a red inverted hammer candle, which is a reversal type of pattern. Now it's not so scary. It looks like it could just chop around for the next year or two, maybe breach this $90 level one time and rip back up through it. This is going to be a very important level going forward. In the end of December into January, a lot of names, a lot of banks as well, started trading below book value. Anytime that happens, investors start looking to put money to work because you're buying companies at a discount. So looks like that's what happened here in this range. We may test it again, put in a double bottom, but it's good to know where trading below book value is currently. So that's worth keeping in mind going forward. As I zoom in back again, the weekly time frame, as I touched on, was an outside bar, took out the lows, and then right back up through it, taking out a lot of bears with them. Daily time frame, I believe, put in a hammer candle above the 50 SMA, so looks like a nice continuation candle. What I'd be looking for is one of a couple of things. Pull back here to the 8 EMA support for some calls, or break above Friday's high, 104.65, for at least a near-term move up here to around 105.5 to 106. Larger pattern that could potentially play out here is the potential bottoming inverted head and shoulders here, measured up to this prior breakdown as the neckline, with approximately a move up to around $113 a share. So nice opportunity from the long side there on a pattern play. Worth mentioning here, the downtrend from late 2018 is up here in the way around 109.30, 109 quarter. It should tread down a little bit lower from there, but there is going to be probably a significant amount of supply up there as well as this gap. So coming into some supply, now that price action has crossed above the significant moving averages, or most of them for my purposes, if price action does not maintain movement up away from here and comes net back down below, that would tell me that there's a lot more supply and it needs to cool off and probably going to come back down and form that double bottom. So it needs to hold above all these moving averages, otherwise the buyers just simply exhausted themselves on this move. So that's worth keeping in mind as well. That's pretty much it for JP Morgan. I don't trade it actively, but I will keep this on my radar for this week. If you have any questions or comments, please feel free to leave them down below. Have a good weekend and good luck on Tuesday.